You're a Canadian homeowner renewing your mortgage in 2026, this video is about thousands of dollars banks are about to take from you. You locked in your mortgage around 2% in 2020, and now with mortgage renewals pushing around 5% to 6%, you're about to pay $800, $1,000 or even $1,200 per month more for the exact same house. In this video, I will show you how banks deliberately anchor you to an inflated renewal offer and why signing mortgage renewal early can cost you $10,000 or $20,000 more and the exact leverage point most homeowners miss. If you want to get a better deal than banks wants to give you, you have to understand the simple math. Most people, they sign the first paper they receive and they lose thousands of dollars. Right now in Canada, 60% of mortgages are about to end this year. Those cheaper rates days are gone, and if you aren't ready, you might struggle to pay for basic things like groceries and gas. Let's look at the guy named Alex. In 2021, he was paying $2,100 for a house, and now in 2026, he's paying $3,150 for the exact same house. That's $1,050 more he has to pay every month, which he was planning to spend on his family and saving. The banks, they're just hoping that Alex, he says yes and pays for it. But when you realize that banks are guessing, you can fight them back. You don't have to be the part of 60%. You can be the one who negotiates a better life. Banks uses two tricks to make you pay more than you should. First trick is early renewal. Banks, they might give you a call 3 to 4 months before your mortgage renews. They will say, rates might go up soon, sign this right now. But here is the problem. If you sign that 5.5% rate, you will lose your cheaper 2% rate right away. You just threw your cheaper payments for 3 to 4 months. It's basically like you are throwing away your half-eaten pizza because you are worried that you will be hungry tomorrow. The banks, they are betting that you are scared to wait, and that fear can cost you around $3,000 to $4,000 in interest for no reason. But while you wait until your regular renewal window, that is basically 30 to 60 days, you can get the best deal while keeping your older rate. You can keep your 2% cheaper rate until the last day. So now you know your renewal window, but do you know what good price actually looks like? The numbers that banks sent you, it's often a lie. In 60 seconds, I will show you how to look for the best rates. So it's like when you shopping for a car, you never pay the price that's written on the window, right? Banks have something called posted rate, and that rate is usually a higher or some with tiny discount. Banks, they are hoping that once you see this number, you just look at it and just sign it. But you shouldn't do that. Before even you talk to the bank, you should check at different websites or call a mortgage broker and find out what is the best rate in Canada that day. So whenever banks calls you and say that 5.8% is the best rate we can give, you can look them in the eye and say that I found a 4.2% rate at other bank. So can you match that? And now you aren't any customer asking for a favor. You are a smart buyer. So the 60-second search can save you enough money for you to pay for your property tax or a family vacation. So now you know what real price actually looks like. So the next big question comes, should you take fixed rate or variable rate? If you take fixed rate, you are stuck in for the same rate for almost 5 years. And if the price goes down, others might get discount, but you don't. On the other hand, variable rate, it's like a roller coaster. You start getting the benefits immediately. But if the inflation stays high, the Bank of Canada might start increasing their rates. So you should ask yourself a question. Can I sleep at night peacefully if my monthly payment jumps $200 per month? If the answer is no, then you shouldn't go for cheaper variable rates. But it's not necessary that you should take 5 years fixed. In 2026, smart buyers, they are taking 3 years of fixed rate. So you have the peace of mind for 3 years, and in 2029 you can check the rates again and see what's viable for you. So now you know the math and the traps. But how do you know that you will win when you walk into the bank? For that, I will give you a 5-step checklist that you must follow. And if you do that, you will be ahead of 90% of the homeowners. Step 1, find your dates. Call the lender and ask for maturity date or regular renewal date. Don't sign anything, just ask for dates. Step 2, get your real number. Look at the rate comparison websites like Ratehub.ca or vova.leads. And find the lowest number for 3 years or 5 years fixed. Step 3, check your budget. Find any online calculator and check your budget. If the new rate is making your budget to it's making your budget to go off, then call the broker and re-amortize your mortgage. That will make some room for you. Step 4, call the lender. Call them and say them that this is what I'm getting. Can you match it? And step 5, don't be afraid to leave. If your banks won't budge, move to the new lender. It seems a lot of work, but you will save $500 per month. And it's the highest paying job you will ever have. So now we have the roadmap for 2026 and you know the traps as well. You have two choices. First, you get the letter and just sign it. And second, take an extra 30 minutes this week and research it. This 30 minutes could save you $30,000 over the next 5 years. So once you secure your lowered mortgage payment, you will have extra cash. So the question comes that where to put that extra cash to grow your wealth. Most people use TFSA, but there is one ghost balance trap on CRA website that catches people completely off guard. And if you use that wrong number, it can permanently shrink your room for growing tax-free. I have analyzed the data to show you 5 traps that most people make and it's costing them thousands. Click here to watch my video 5 traps that people make while saving for a down payment. And if you have any specific questions regarding 2026 renewal, drop your comments below. I'm Umang Bhanushali. Thanks for watching. Until then, see you in the next video. Bye.